Welcome everyone to our introduction to stock analysis on Zoom. And what we're going to do in this session is walk you through our simple three-step process of evaluating a stock, understanding the situation of the business, applying technical skills, and ultimately coming up with your investment thesis based on your research and your understanding of the stock. And also, we're going to go through the presentation that was put together by one of our community leaders and student analyst, Jeffy, to better help you understand what a final product looks like when you're pitching a stock. So with that being said, let's dive into the material where we're going to give you more of a framework on how to think about evaluating a stock. So let's put my direction here on our slide and let me pull up my annotation. So what I've displayed on this slide is three parts to help you better understand the components or give you a reference point or check marks on things that you can do if you're evaluating a stock that's in your portfolio. If you have a stock competition, if you're a student that you want to analyze and present to the panelists, or if you're preparing for an interview, how do you think about evaluating or analyzing it so that you have more of a structured roadmap on how to do these things? So the first part is performing due diligence. This is all surrounding understanding the situation of the company. And of course, when we dive into the presentation on Zoom, we're going to better help you understand what's the situation on Zoom so that you can see the practical application of these concepts. So with the first step is understanding the business model. What does this mean? Well, what's the description of the business? Product, services, what industry are they in, okay? How big is the industry? What's the competition? In terms of the situation, how did they perform in the most recent quarterly performance? Ideally, over the last 2 quarters, did revenue beat expectations? Did margins expand, increase? Did the company make any major or significant investment in their operations to help them grow in the upcoming quarters or years, to give investors a more positive or improve their confidence that the company can continue to grow? Therefore, they would be inclined to buy the stock. So it's very important that you understand these things when you are doing your own due diligence. And lastly, of course, like I've mentioned, industry. How big it is, what's the trend, what is the behavior of the consumer, what are the initial drivers of that industry, also the market share, and who are the main players. So you need to understand the terrain, the playing field that your company, the company that you're evaluating, is performing under, because it depends on, are you competing, for example, Amazon in the e-commerce space? If you are a smaller middle market company that is perhaps under $1 billion, you have a very tough road ahead if you're competing online with Amazon. So it's very important that you understand the dynamics of the industry that your company is operating in. Now, in terms of the story, as the second step that I've highlighted here, everything on Wall Street is a story. Every company has a story. And why is understanding the story important? Because the multiple, the valuation that a company receives depends highly on the story of the business. Now, stories can be broken down into several categories. For example, we listed some of them over here. Is your company a fast or slow growth story? Is it a turnaround or restructuring story? Is it an asset play? Is it a cyclical story, like what we're experiencing right now, where energy has been leading the overall market? It has been one of the main sectors that has been outperforming other sectors because it is a cyclical play in the backs of the economy reopening, having higher GDP growth, and resuming some sense of normal business activity where people are starting to drive, they're starting to travel, commerce is starting to pick up. So energy is more in demand, and you're seeing it with what's been happening with stocks in the energy sector. So it's important that you understand these stories because it impacts the valuation of your stock. In terms of the second part of evaluating or performing stock analysis, is applying your technical skills, okay? Now in step number 3, I have here financial modeling and forecasting future expectations like revenue, cash flows, earnings per share of the business. Because ultimately, when you understand how to forecast the cash flows of a company, Then you can decide to perform valuation, DCF analysis, comparable company analysis, to better help you understand, is a stock overvalued or undervalued. Also, I've listed right here, you can easily understand, is the company going to continue to grow? Okay. Also, is it going to be a slow or negative growth story? So this is the importance of being able to forecast the cash flows of the business, or the three statements. These are things that you learn when you are developing your skill set as an analyst in forecasting financial models. And ultimately, it helps you understand or arrive to your own conclusion on whether or not the story that we listed here above will continue, or it will change because of some new material information that the company has been working on and introduces it to the market in the form of a press release. So it's, again, very important to understand what is the future expectations of the business. And the way to do that is by having technical skills like financial modeling. Now, in step number 4, I've illustrated here valuation. So once you have one component of the technical skills, which is being able to forecast a company income statement, balance sheet, the cash flow statement, what do you do with that information? Well, you perform valuation, okay? And then ultimately valuation will help to determine, is the stock overvalued or undervalued? Very important. Now, in terms of the final part of stock analysis, is formulating your own investment thesis, your own opinion, collecting all the information available so that you can determine, is this an investment opportunity that fits your parameters, right? Or in terms of your risk appetite, does it have the right risk reward? Is the upside worth the risk? And one of the things that you can look at, of course, is when you're formulating your investment thesis, is catalyst. Does the company have a new product that they've been working on their pipeline, that once they introduce it to the market, management is expecting higher revenue growth? That information can be added to your financial model, and you can run that scenario. Also, once you have your catalyst, then what is your recommendation on the stock? And of course, your price target and potential return on investment. So this is why it's very important to understand valuation, determine if a stock is overvalued or undervalued, so that you can apply your own investment thesis and come up with your recommendation. And last but not least, on step number 6, is to evaluate the risk. Not every investment thesis, not every investment recommendation is going to work. We are in the probability business. And it's important to understand that, because when you do all of your homework, for example, if you spend 100 hours evaluating a company, understanding the industry, putting together an investment thesis and a presentation, it doesn't mean that you're going to be right. So you have to be aware of other possibilities in the market, and of course, put in place a stop loss. Now, what are some of the things that you need to keep in the back of your mind or review when you are accounting for risk? And if we listed some of them here. Management ability to execute their strategy and their business plan. Do you have confidence in the management team? Are they capable? Okay. What about the general economy? How fast is GDP growing? What is the current interest rate environment? What about regulation? What about industry challenges that a particular sector might be experiencing? For example, right now, we had COVID a year ago, and we are now emerging from a pandemic that is starting to revitalize the economy, if you will, with more restrictions being put, not more, but less restriction really being put in place as people start to get more vaccinated. And you're seeing it in technology as well. In an environment where inflation, which is what we're seeing, as it starts to creep higher, what do you end up getting? You end up getting higher wages. And I've read an article where retailers are finding it difficult to hire people. And part of the reason is because of the incentive that the government has been providing in the form of a stimulus relief package by giving Americans a stimulus check to cover their basic needs. But when that is in place, Do they have an incentive or motivation to go back to work? The answer to that is no. So what is happening is employers are now starting to raise their wages to incentivize Americans to go back to work. So how does that appear in the cash flow statements of a company, in the income statement of a company? Well, their SG&A, salary and administrative expenses increases. Therefore, their margins decrease. They're less profitable. And that environment creates a session of inflation, but more for the Fed to start to raise interest rates. And that's one of the main reasons why technology has been underperforming. So it's very important that you understand this point right here. What is the environment of the general economy? Does it pose a risk to the company and the industry that you're currently evaluating? Also, competition. Okay, is there increased competition on the industry or the company that you're evaluating? Is there another business that have a better product or a better service that is delivering a much more improved customer experience? Very important to understand that. And last but not least, of course, regulation. So these are some of the variables to keep in mind as part of your checklist when you're evaluating risk on your business. So this slide right here is just meant to give you a general representation on what to pay attention to, what to research, what to familiarize yourself and understand when you are evaluating a stock. Three steps here. The first one, understand the situation overview, to summarize. The second one is to apply your technical skills, financial modeling, valuation, discounted cash flow, comparable company analysis. And the last one is to formulate your own opinion and come up with your own investment thesis and determine what is the upside of the stock, what is the potential downside, and do you have conviction. So I hope this gives you a framework. I hope this summarizes the 3 parts to our process of evaluating a stock. Now, when you look at a final product, what does that look like? What is a presentation in the sense of what other professional analysts are doing on Wall Street if they're working at a hedge fund and they're coming up with their own investment thesis and pitching it to portfolio managers? So we're going to go through that on Zoom, and we're going to show you what the slides looks like. And of course, Jeffrey, you can weigh in on some of this and then give us your perspective on the company and the situation. And then we can also look at the charts as well, because it's something that I look at very closely to give us an edge on what other traders, portfolio managers, and just the overall sentiment of the market is on Zoom. So with that being said, let me pull up right here the presentation on Zoom, and we can go through this rather quickly. Let me maximize this. Actually, let me change this to full screen view. Here we go. And we can go through this, but before we do that, Jeffy, how are you? And can you briefly just introduce yourself for members of the audience?
Hi, I'm good. Thank you, Mr. Romero. My name is Jeffy. I'm a rising third year at Northeast University studying finance and fintech. I am a community leader and an equity research analyst at Romero Mentoring, and I'm excited to be here.
All right, great. So let's first go through your situation overview. I see right here, and let me mark this so that it's clear to follow. So year to date, Zoom is down 45%. Obviously, it's been underperforming since October 2020. And we understand part of this is just tech underperforming, inflation, and potentially the Fed raising interest rates. Even though they said earlier this year that they were not going to raise interest rates this year, I think they're playing with fire. I think the market and just inflation is going to force them to raise interest rate maybe towards the end of the year. I don't see a scenario where they don't, just because it's going to start to creep in. And you're seeing it right now. If you've been paying attention to some of the financial news, there's been some shortages in some parts of the country with there is no gasoline at gas stations. And you're already starting to see that slowly. So that's part of the reason why the stock is down 45%. But I want to get more from your perspective, Jeffy, on really what's the situation with Zoom at this point, and just help us better understand what you put together on this slide.
Yeah, so Zoom is a stock that has increased substantially over the last year because of COVID. Their revenue has increased over 300% year over year. That's in large due to transition from in-person work and in-person skill to online business activities and school activities because of COVID-19. So that's where a lot of its growth has facilitated in the last year. But recently, since October, its all-time high, it has dropped because investors are shifting away from these growth pandemic stocks. These COVID stocks that have done very well during the COVID period have started falling off. You're starting to see less volume in it. And then obviously with the interest rate and the inflation, tech stocks have been underperforming. So Zoom as a company is doing extremely well, but a lot of the attention that has received during the COVID has fallen off, which is enlarged, which has shown it to decrease 45% from its all-time high.
Yeah, and I see that. I mean, when you talked about revenue for 2021 reached 2.6 billion, 326% growth. I mean, that is massive, massive growth. But in terms of your price target, okay, so you have a $426 price target, represents approximately 38% from their current level. How confident are you on that price target, given that the current market environment is it's not conducive or favorable to high growth technology stocks?
Yeah, for sure. Obviously, the market has not been favorable, but I think there are catalysts for Zoom stock to increase. So just looking at the forecast, Wall Street has a sentiment that Zoom's revenue will grow 20% year over year through 2026. So this is a stock that will see high double-digit growth consistently for the next 5 years. And in addition to that, looking at more short-term, near future things, their Q1 earning is expected to be released in June 1st. So that's going to be a big catalyst to see whether or not they have successfully adopted the transition from COVID to post-COVID world, whether or not they can continue to stick around. And secondly, they also have recently announced that they have spent $100 million in a venture fund to increase the ecosystem of Zoom. So these are like apps and companies that will aim to develop Zoom. And then they're really trying to embrace this sense that Zoom will stick around and how they will continue to be a market leader post-COVID.
So 100 million in what kind of fund? In a venture fund?
Yeah, in a venture fund.
Is that how they stated and named it in their press release?
Yeah, it's a new venture fund to stimulate innovation in the Zoom apps ecosystem.
Wow, interesting. Okay, so that's more on the operational side. So they're trying to figure out how to monetize the current users that they have and maybe help them upgrade, but retain that user to increase the lifetime value. Okay, and $100 million is significant. Did they give any additional information? Did they give more specifics on what it is that they're planning to actually do?
Yeah, so what they said was they want to create a growth of Zoom's ecosystem of Zoom apps, integration, developer platforms, and hardware. And so each company will receive an investment of anywhere between $250,000 to $2.5 million to help build solutions. So this will help how customers meet, communicate, and collaborate, and increase the overall functionality of the.
Wow. Okay. Interesting. When looking at your financial model, have you accounted for this? I mean, will this help increase revenue growth by a couple of percentage points? Have you already looked into that?
Yeah, I saw how revenue growth. So a lot of my so I've created three cases: a base case, a bull case, a Wall Street case, and a bear case. So the bull case will encapsulate how this will increase revenue a lot because of the successful customer retention rates, higher, more functionality, more options. So this will allow Zoom to stick around post-COVID. So that's accounted for in the bull case.
Good. Wow, that's new information for me. And when we get to look at the stock again, we'll see if the market is pricing that in. We'll take a look at the price action, if it even moved the market in, and if it got other investors interested enough to accumulate shares. So we'll get to see that in a price action. But for the members in the webinar, this slide really encompasses everything that we just talked about in the previous slide about a three-step process to stock analysis. The first one was to understand the situation of the business. Well, you see that right here. And also market sentiment, right? What is other Wall Street analysts thinking about the stock? Obviously, you have here, Jeffy, that other analysts, Wall Street consensus price target is $466. They expect the stock to grow. So I assume they're bullish, right?
Yes.
Okay. Okay. So these first two account for the situation overview of the business, understanding the story and what's been happening. Remember when we also talked about the industry? Here you have information about the industry. And then when it comes to applying technical skills, valuation, it's being applied in this final section down here. Now, what about risk? Do you see any risk associated with the overall business model of Zoom? What's the worst case scenario where your price target doesn't materialize?
Yeah, so if on June 1st, if Q1 earnings aren't as good as they expected, that could be a major downside to the Zoom stock because obviously the stock has been underperforming very well. And if it continues to, not meet earnings in Q1, then I will see the stock as, maybe it will not have as much upside. But obviously they are in a very highly competitive environment with a lot of competitions with big names like Google, Microsoft. They're all having their own implementations, their own video communication systems. So it's really up to Zoom if they can continue to monetize the product and then increase their functionality, as well as expand to overseas and international areas. So that's where a lot of the catalyst is.
Okay. Now let's go through a couple of more slides here before we showcase the chart. So we have here other Wall Street consensus analysts, what they're saying. Okay. Then we have your company profile slide, product and services, financial performance. So again, this is all part of due diligence and understanding the story of the company, doing research, collecting the information, and then stating your findings to better help you understand really what's going on with the business. This is really going deep, doing a deeper dive into the company. Then your technical skills, being able to forecast your income statement, your balance sheet, your cash flow statement, and of course, applying valuation, comparable company analysis, trading multiple valuation, discounted cash flow analysis. And here we have a football field that displays your price target and the different scenarios that you have. Let's see here. So for your bull case, you have a $564 bull case, price target for your bull case. Okay. And then your base case is the price target that you had previously, 426. And the stock is currently at 307, so there's a lot of room to the upside. Okay. Now let's pull up the chart because it's important to see this. Okay, let's change screens here. Let's pull this up. And if we look at this on a weekly time frame, all right, here it is. I mean, we've already discussed how the stock has been declining since October, right? And this is just indicative with the overall tech sector, all right? Many of these high growth stocks from 2020 that increased significantly are basically now declining. There's a lot of pressure from inflation and potential rise of interest rates coming from the Fed as well. So from a technical standpoint, Jeffy, I see that the stock is coming right back here from where it originally broke out from. So other market participants, they're seeing this. So technically speaking, this is potentially a good entry price on the stock. And you've mentioned that earnings are going to be coming out in June, so that's a potential catalyst. But what I'm more concerned with is that press release that you mentioned, that they are introducing a $100 million venture fund to invest in new innovation to improve their ecosystem. When did they announce that press release?
I believe they announced it in May. In April 19th.
April. So was it this? Okay, so April 19th. So it must have been somewhere over here in this period.
It didn't really have a big impact on the stock price of Zoom.
Okay. But I'm seeing this past week, right? This candle right here, this price action, the stock ended up positively. I see a slight increase in volume, which to me is indicating that other institutional investors, if they're longer term, if they are bullish, right, longer term on the stock, this is a great opportunity for them to come in and start accumulating shares, right, at this level. But the other component is that temporarily, intermediately, the stock is in a downtrend. So for me to really get more confidence in the stock, they need to break this downtrend channel, right? They need to start reversing the trend, and maybe the catalyst will have to be earnings. How confident are you that they might beat earnings in the upcoming quarter? How do you think they're going to perform in earnings?
Yeah, I think they're perform very well in earnings because obviously the revenue growth isn't going to be as high as last year. But I think companies and schools they have continued to use Zoom despite getting vaccinated because it has been an integral part of businesses nowadays. Essentially become the new normal of the business world. So I think Zoom will have a very good quarter, especially with the opening of new schools, businesses starting to transition from remote work to in home, but they're still using Zoom. So I think Zoom will keep up will beat earnings, and I'm really confident that there will be a catalyst.
Okay, okay. I'm trying to see if I can find a technical tool and perhaps run Fibonacci retracements. Let's see if I can find it. Nope, it's not on this one. Is it here? Should be here. I just want to gauge the retracement. Belief is this. Let's see. So this one, nope, it's not this one. So can I just remove it? Yeah. I want to see from a Fibonacci retracement level if it's at the 50% retracement or even higher or less than that. It should be somewhere around here. Here it is. Okay. Let's open this up. There it is. So at the Fibonacci retracement, it is at the 50 and it just it's between the 50 and the 60. Okay. So from a technical analysis standpoint, right, this is where you might be finding support, where the stock might find support, where other market participants are looking at this, where if the stock maintains revenue growth over 20% for the next, let's assume 3 to 4 years. I don't know if you forecasted 20% revenue growth for the next 3 to 4 years. But if that's the case, and other market participants believe that Zoom will continue to grow revenue at that rate, this could be a good entry opportunity. And of course, you will set your stops underneath the low of this month. And the low of this month is right around here. It's trading at around, the low was 273. So if you are a longer term bull on Zoom, you could potentially come in here, okay, maybe 5, 6, 7% of your portfolio weight and have a stop underneath the low of the month. This is very technical now. And that low of the month is 273. And the catalyst would be what was it going to be, Q2 or Q1? Q1? Okay, so if the catalyst is the Q1, they perform better than expected, then you might get a change in direction where the stock is going to increase and new market participants are going to come in and accumulate shares. And then that would be the catalyst to give the stock momentum to the upside. So this is a very technical and tactical way of looking at the stock if you're a longer term bull and you're looking for an opportunity to enter and buy soon. It will probably be around this area. But of course, you want to apply proper risk management, the proper portfolio weight, and of course, portfolio management disciplines and concepts here. So I wouldn't go in here with no more than 6% of my portfolio weight if I am executing this trade. Now let's go and look at it. Let me remove this just to give me a cleaner chart. Let's see, am I able to remove the Fibonacci? I think I could remove it by clicking here. Yep. Yeah, and this is a monthly time frame. It looks so much more clear on a monthly time frame. Now, to give the audience more perspective on this, here's what I think might play out on Zoom. And we could look at other examples. A great example to compare this to, and it's a different industry, but it's still tech, it's still growth, and paying close attention to the price action and the pattern. Here's what I am looking at. I'm looking at Roku, okay? Roku, if we look at the stock chart, okay, let's go back to this time period, right, in 2019. Roku had a nice move to the upside in 2019, right? The stock went from around $40 to $170, okay? Then we got into a period where the stock started to decline, right? I mean, it declined more than 50%, but the growth was still intact, okay? And after the turbulence or whatever market jitters were happening during this time, the stock resumed its uptrend, okay? Then it broke, and then it continued moving higher. So if we change this to a weekly, I think it'll become a little bit more clear. Okay, you see it right here. Goes from 40 when they reported, the press release was that they were increasing their user base count better than expected and to anticipate better than expected earnings. And that was the catalyst that just took the stock to the upside. And of course, they continue to beat earnings every quarter after that. But then the stock declined tremendously. See, I mean, you see this here? This is a significant decline. And of course, COVID happened. But slowly, the stock began to recover. And look what happened after that. So I'm paying very close attention to the price action of Roku as a case study of maybe what can happen with Zoom if they report better than expected earnings. Do you see that, Jeffy?
Yeah, I see it.
So hindsight is always 20/20, but when you look at the variables, revenue growth, the industry, price action, and chart patterns, which ultimately is just a collective view or the sentiment of other market participants, I think that if they have better than expected Q1 earnings and volume comes in, shares accumulation by the institutional investors, then it's game on. Now you have a high probability that the stock will reach your price target and it can potentially come back to 600 and break it. So that's one scenario, but the main catalyst is going to be earnings. They have to beat earnings in order to give me confidence and also for that scenario to be in play. If that's not the case, then I probably wouldn't even touch the stock.
Yeah, for sure.
Okay, and let me just see here on a daily time frame. Okay. Yep, this thing is right back down where it broke from. Okay. So pay very close attention to this one. Again, from a technical standpoint, you see here, it came right back from where it broke from. So technically speaking, this is a good entry right here. And you could take, again, 5-6% portfolio weight to test this thesis. And if they beat earnings and the stock continues to creep up, then you could pyramid. Then you could start scaling in a little bit more and have a stock that you could probably own for the next 3, 6 to 12 months and expect a reasonable return on investment. But separate from the chart, of course, you have the research. You have the situation overview. You have the model. You have your valuation, and you understand the business. So when you combine the technicals with the fundamentals, it just makes you, it gives you more confidence and it increases your chances of getting your investment thesis correct. And it gives you an edge. It's always good to see the entire picture, what analysts are looking at and what traders and portfolio managers are also looking at when they're interpreting the charts. So I hope that gives you guys some insight. I hope that's valuable to you. And Jeffy, on your end, any final comments or thoughts on Zoom before we wrap this up?
Yeah, I think Zoom, their revenue growth can be expected to be 20%. They have strong revenue growth. its margins are expanding, and I believe that they will be a key player post-COVID. So definitely keep an eye out for Q1 earnings to see if volume increases and shares accumulate. And then if they do, that could be a catalyst for a high return. So definitely keep an eye on that. And thank you, Mr. Romero, for this opportunity.
All right. Well, you're welcome. And thank you for putting this together and participating with us today. All right, folks, so we're in the session here. I hope, again, you found value in this. I hope you get to see a little bit more of our 3-step process. But when you get to see the full picture, when you get to see what a final product looks like, I hope this helps you better understand what it is that other professional analysts are doing, and also combining it with charts and technical analysis. So with that being said, I'll end the session here. Take care, and I'll see you in the next one. Bye-bye.